Tom Lee now, he's here with us at Post 9. It's good to have you back.
Great to see
your
you.
thoughts as you look at these markets? Been real interesting price action over the last couple of days. Thought our reporters set the table very well on the issues at hand that investors need to keep their eyes on. What about yours?
Yeah, I think the headlines have been scary. No one wants to see the U.S. in a conflict, but I think it's been spot on to note that markets have been taking this much better than expected. I don't think anyone can say we're bottomed yet, but this is what looks like the makings of a bottom, right? That you get bad news and the markets are taking it in stride. And more importantly, I think we've had a position reset. And so on the other side of this, I think is going to be a lot of opportunity.
What would give you the confidence to say, you know what, that's a sign of a bottom? What do you need to see?
Well, some things like if we go back to April, a simple thing would be the VIX making a spike to over 40. Last year was 80, but we won't get to 80. And then, of course, retracing. That would be a clean sign because that's so much de-risking. Another sign would be we get another scary headline and gold continues to sell off, and then stocks actually turn green on the day because that means we've washed things out. I think we're pretty close.
You're watching oil as closely as everybody else is. I thought it was interesting, some of the notes today. UBS says we expect only minimal or a brief disruption to global energy supplies. We therefore stick with our base case that U.S. equities, will produce good gains this year. Katie Huberty over at Morgan Stanley. Recent geopolitical events unlikely to change our bullish view on equities over the next 6 to 12 months. What do you think?
Yeah, I mean, I think oil. I think we saw things that kind of made sense to me. Oil spiking on closures or potential closures of the Strait of Hormuz, but the response from Washington. And I think that's maybe more important, that I don't think Washington wants high oil prices into the midterms. And of course, it's very unpopular with Americans. I mean, it's a big burden. So I'm going to be in the camp that I'm watching the price action. I think it's encouraging that oil's not surging into the close.
Hey, part of the Huberty note focuses on the AI trade, which has been really interesting, I thought, over the last couple of days. Back, some might say, to that safe haven type price action. I mean, look at right now. Microsoft's up, Meta's up, Amazon's up, Nvidia's traded better over the last couple of days. What do you make of that?
Well, in our view, March was the makings of a bottom because the software, the Mag 7, and the cryptos we thought were like 90% through to their winters or declines. They are outperforming, and I think that's a sign of leadership. But fundamentally, you're absolutely right. If we get global trade disruption, you still need AI, and you still need the Mag 7. So I think they're actually good fundamental stories.
There's a